All right, guys, welcome. Now that we've kind of gone through all of the initial first section, which was the market makers cycles, the weekly cycle, the intraday cycles, now I want to kind of go into the timing element and stop hunts. So this is where we're going to go with this section, timing and stop hunts. Knowing that time is a very important part of the strategy, knowing that you cannot really take trades if it's 4 p.m. Eastern Standard Time, as New York session is closing, so it's not like you just open your chart up and you're allowed to take trades anytime, right? You wait for London session and New York session in order to even take any positions in the first place. And this is where the stop hunts occur during London Open, New York Open. So without further ado, let's get into this. So these are the times that I want you guys to write down. And this is essentially, I do provide all the indicators and my template in this course where you can simply install all the indicators, take the template, install it, and you're going to have it on your MT4 platform. But sometimes the work time indicator, which is the boxes, the Asian, which is the boxes, Asian box, blue box, red box, New York box, sometimes they don't adjust to these timings properly. So knowing that, okay, 5 p.m., high-low reset, that's the market maker spread is set. 5 p.m. to 8 p.m., these are all times they're in New York, is the dead gap. That's when the expert advisors, that's when the algorithms, when the robots are trading. Asian session begins 8:30 p.m. and ends at 3 a.m. Gap time is 3 a.m. to 3:30 a.m. Now, what happens in gap time is the Asian market maker will get on the phone with the London market maker, and they'll talk about basically, where all the orders are. They'll talk about how much volume is going long and how much volume is going short. And if London market makers should stop hunt to the upside or to the downside, how many orders do they need to pick up? How many orders do they need to pick up? How many stops do they need to hit? All those things are spoken to within those 30 minutes. That's what gap time is essentially, okay? London session, 3:30 a.m. to 9 a.m. Gap time is 9 to 9:30. So with this strategy being London session and New York session are going to be the most important, and this is where we are going to be stalking the charts like a hawk and waiting for them to create the stop hunt for us to enter in the trade. New York session from 9:30 a.m. to 5 p.m. Now you should be out of all your trade, or you shouldn't be looking for any more trades after 11 a.m., after 12 p.m. noon New York time. So most of your trades should be taken around the beginning of London session and latest around 11 a.m. New York time, okay? So let me make that a little bit easier to see. So you should be looking to be taking trades around 3 a.m., which is gap time. That's when you should start to look for the trades. And the latest that you should be looking to take trades is going to be 11 a.m. once New York session has already been on its way. Okay, so hopefully all this here makes sense. Okay, so our Asian and New York boxes, this is going to be important. So just because our Asian session is from this time to this time, right? Just because they're Asian session, which I told you about, is from 8:30 to 3 a.m., that doesn't mean the blue box is going to be drawn at that time. So take note of this. And if the template does not automatically paint the blue box and red box at these times, then you must adjust it yourself. So the blue box, the Asian session, will start painting at the start of each day around 7 p.m. and will stop painting just before London Open. Okay, well, and it's going to stop painting just before London Open, 1 to 2 a.m. Now the red box, which is our New York session, this is going to start painting actually at the start of the US session, 9:30 a.m. and will end at 5 p.m. So these are times, stop hunts. Now the most important times are going to be 3:45 a.m. Eastern Standard Time and 9:45 a.m. Eastern Standard Time. These are called the Brinks trades. Okay, the Brinks trade is where the time is going to be the most essential, where these prime stop hunts are going to occur. 3:45 being the London stop hunt and 9:45 being the New York session stop hunt or reversal. Okay, this is where we pay attention to the 15-minute chart and look for all the rules to be met, catch the stop hunt, and trade without fear. Okay, so I talk about also about the market maker moving in threes, right? So 3 pushes to the high or low during the stop hunt, 3 vector candles to the high low during the stop hunt, 3 levels of rise or drop in the weekly and intraday cycle, which we should already know. 3 is a very, very important number because it's what they use to exploit our human psychology. And if we're seeing 3 pushes, we think it's going to continue. If we see 3 vector candles, we say, okay, 3 is going to continue going to the upside. This is wrong. This is why they use the number 3. So right here is what we see here is actually on EJ on the 1-hour chart. If we were to look at this, this is a nice M formation with TDI outside the volatility band back inside with divergence. Right here, you can also see it's a multi-session M. So that it's a multi-session M and it was anchor pointed, right? The anchor point was locked in for the week. And we had an aggressive move to the downside. Now what we expect is this was level 1. So now what we expect is, right, we wait for Asian session, right? We wait Asian session, okay, below 50 pips. And we wait for the stop hunt high and drop. That's what we're expecting. We expect this. And nonetheless, look what we get. We get 3 pushes to the high. Look at this. After here, 1 push, 2 push, 3 pushes. The 3rd push gives us a nice long pin right here to our 800 EMA. And you got him lights out to the dealer. Look at TDI. Touches the volatility band. Back inside. Divergence. TDI makes a lower high. Price makes a higher high. Okay? So all these things come into confluence. But before you even take any of these trades, you must understand that you must be in the right part of the cycle. That's why I preach to learn cycles first. Okay, same thing here is we were actually coming from a peak formation here on EJ. And what happened here is we expect to stop hunt high drop. So nonetheless, what we do, we wait, right? Asian session, London session begins right here. We already had our 1 push, 2 pushes, and 3 pushes to the high. Look at this pin to yesterday's high, the blue tracer. The blue tracer is always going to be drawn at here. That means that, yes, that was yesterday's high, which is right here. The blue tracer down here indicates yesterday's low. So this is a daily high-low indicator. Yesterday's low, yesterday's high. Yesterday's low, yesterday's high. Okay? So yesterday's high, or that day's low. Last day. So this is this day's low and this day's high. So, okay, that makes sense, right? Now we had this nice pin rejection off of yesterday's high. This pin grabbing the orders for its first leg. Closes below the 800 EMA. Works the area for about 45 to 90 minutes. Right? And right here issues our second pin. Closes below the 800 EMA. Look at TDI here. Outside the volatility band. Back inside. Either both very extended overbought numbers. And we get in this trade after this bearish candle. Right here. Stop loss goes 15 to 20 pips above the high. We can take our 50 pips. Or if we know where the cycle is going, we could take out one order at 50 pips. Move our stop loss now into profit or break even and hold for the remainder of the cycle. Okay? So EJ right here, take a look at this. So number one is I want to show you kind of start seeing the bigger picture. On the 1 hour time frame, this clearly shows a peak formation and the way that I teach it, looking at all those different aspects, right? So on the 15-minute time frame, we also had what? A head and shoulders pattern. Head and shoulders identifies peak formation. Then once price moves away from the area and confirms that this is level one, now what we expect is, right, we have our Asian session. We expect them, they're accumulating their orders. We expect them to stop hunt low towards the peak formation, and we trade away from the peak, in line with the peak. So we expected this, didn't quite get to our stop hunt box. Now our stop hunt box is 25 to 50 pips below or above the Asian range. So it will automatically be painted 25 starting from here. Starting from here, this is from the top of the box to right here. That right there, that distance right there is 25 pips, okay? Now from here to here, that's going to be 50 pips. And this will always happen, right? The indicators are coded that way. And this is how we catch our prime stop hunts. Now, 1, 2, 3, right? 1, 2, 3, 1, 2, 3. Notice the 3, 3, 3, 3, 3. 3 pushes to the low. TDI stop hunt, look. Outside volatility band, comes back in, taps the volatility band, and trades away from it like that. Look at this pin right here. And then we had half a railroad track right there. We enter into this trade. And notice how it happens during around 5 a.m. New York time. Almost going into New York session. This actually happens later. This is around 7 a.m. New York time. Notice that most of the trades that we take are always going to be in between the blue box and the red box, which is London session. Which is London, L for London. And of course, this is New York session. All this contained in here. Notice how it pins off this 800 EMA right here as well. Guys, once you start seeing this on your charts as well, it's going to start opening up a lot of different things. And you're going to start seeing Forex in the proper way that you should be seeing it. Okay, guys, so that was it. That was that for this introduction now to the stop hunts and the timing. And there will be more. So stay tuned, and I'll see you in the next lesson. Thanks.